Hi friends, welcome back. So a lot of red in the market today, and the question is today when the bubble finally pops? Well, let me read some headlines to you, and we'll have a chat about it. So this is a headline: S&P 500 snaps longest streak without a 2% decline since 2007. And so for those of you who are new to the market, you haven't seen something like this before. A lot of us haven't seen something like this before since 2007. So that's the headline there. Here's another one: AI fever cools, sending NASDAQ 100 into 1 trillion tailspin. I've been saying this all along, that the AI stuff is a bubble. Evidently, this is a big sell-off today. Again, 1 trillion. Here's another one, guys. You'll notice a pattern here. Airlines brace for the end of revenge travel boom. Now, essentially what it was, you guys know we're all locked up, cooped up because of COVID. You're like, you know what? I got to get out. I got to go on vacation, these kind of things. Ultimately, though, people ran out of money and they got to go back to work. So airlines are bracing for the end of the revenge travel boom. And you can write in the comments, where did you go for revenge travel? That's what a lot of people did. Here's another one: U.S. stocks sink after big tech earnings disappoint. Because ultimately, right, I understand. If you watch a lot of channels, they'll say, hey, look at this chart. Stocks only go up. They went up 10% last year. They're going to go up 10% this year and forever, right? Or if you're in like crazy stocks, 1,000% this year, 1,000% next year. But ultimately, though, if you are investing in real companies and you care about real earnings, real numbers, you certainly want to watch the earnings reports. That's what we're going through right now. And the numbers came out from Google and Tesla, not so great. And so people are sort of losing the, what's the right word to say, losing the make-believe attitude. Here's another headline from today: real estate market is broken for everyone except the ultra rich. And I've mentioned this many times, guys, on the channel. For those of you who've been seeing inflation in your neck of the woods, until the housing market really pulls back to where people can actually afford to buy homes, I mean, young people, that is, or even old people. Guys, if you're locked into a low interest rate mortgage, you don't really have much incentive to move around. And so there's just not a lot of activity in the market. And there hasn't actually been a pullback in prices. I'm just talking about in terms of housing prices, but you can talk about rents, these kind of things. And I guess the only one who can afford real estate right now is the ultra rich. Here's another one. Headline: this is all coming out today, and it's interesting how they all kind of correspond. The hottest job market in a generation is over. And essentially, if you're graduating college this year, it might be kind of tough. And I'd like to hear from people who are recently new grads, what the market is like out there. I do know that some companies have been pulling back. We talk about your Teslas. I think there was, and then also too, how are the stocks responding to earnings? This was, and actually I just did a video on Tesla, and I was actually wrong. I said down 11% because I made the video before market close. But now here's the headline: Tesla shares closed down 12% after earnings miss for biggest slump since 2020. So again, if you're new to the market, you haven't seen this kind of thing before, right? And people in Tesla haven't seen this kind of thing before either. Honestly, I thought Tesla was going to go down like 30% or some really crazy number, but the week ain't over yet. Tesla's not alone. Ford shares were down 11%, massive earnings miss. And you had this: Deutsche Bank shares dropped 8% after lender snaps 15-quarter profit streak. Markets go up and down, right? And now we're kind of in the down phase. However, there is a bright shining spot in the market, and it's not surprising if you know who it is. It's Chipotle. Chipotle shares pop more than 10% as earnings revenues top estimates. Restaurant traffic rises again. And true story, last time my wife and I, we were in New York City, and we saw the price of food. Let's just say I don't mind eating Chipotle. It can be really expensive. I mean, you go out to dinner, like I think we went to an Italian place, and it might be for like both of us, well over $100. You guys know this. You guys know how much stuff costs. You can go to Chipotle. I think these days is it maybe $10 a person, which is still actually pretty high. And then together tax and et cetera, maybe you're over 20. But this is essentially what it is people like, okay, and this is my opinion at least, if I don't feel like cooking and I want to eat something cheap, it's not going to be McDonald's. It's not that healthy. I think Chipotle is healthy. Please don't ruin the fantasy if Chipotle turns out not to be healthy. Let me know. I mean, when I was a kid, it used to be Subway, but these days Chipotle kind of fits that bill. It's a little bit more than McDonald's, but if you're going to eat that kind of food, go with Chipotle. However, one thing that I like about living here in Busan, if you guys haven't seen our videos on that, we have a lot of local mom and pop stores where it's not a fast food chain. It's not a big box retail restaurant, something like that. It's just a locally owned place. They serve healthy food. It's affordable. It's good for you, and they have quite a bit of variety. So watch our videos on that. I'm just talking about this stuff because this is sort of the considerations that, you know, you have to think about when you're talking about the market is what are consumers doing with their money? And I think the Chipotle going up is really telling. So is this going to be the time when the stock market bubble finally bursts? Well, you know, we got a strong indication of that today, but we still got a long ways to go. And ultimately what we've been seeing a lot lately is people are still taking speculative bets, meaning that you're betting on companies, you know, stock or whatever, because you think the stock's going to go up. It's not based on, hey, I like this particular company because they earn a bunch of money and I want a piece of said profits. And even if you are investing in companies that say that are profitable, we're actually, you know, above historical levels and above, you know, normalized PE ratios, right? Generally speaking, the market tends to revert to the mean. So when things get a little bit overvalued, it'll tend to pull back a bit. So it doesn't mean that Apple's going to go to zero, Microsoft's not going to go to zero, etc. But things may slow. And you know, if, and I say if the market doesn't believe in numbers anymore, we'll see when earnings come out how it relates to, but I can just tell you guys, you know, historically speaking, we are a bit high. Now, the one thing that I, you know, stress with you guys all the time is just understand, it doesn't necessarily mean you sell everything, go 100% cash and just forget about that stuff, because it's hard to time the market. Like I can't tell you exactly that today is going to be the day that's, you know, very, very top. I can give you strong indications of that. That's why we go through the headlines. It's like, hey, look at this, people, you know, can't pay their bills, or hey, look at this, people can't afford houses, or hey, look at this, Tesla really disappointed with earnings. So normally an earnings season like where we are now is kind of one of those turning points, and we're going to see if there's a domino effect of multiple companies. Also too, regarding, you know, any kind of like major bubble burst, you're always looking for what is a black swan kind of event, some crazy thing that could happen that would really, you know, sort of rupture people's dreams, or what's the right word to say, like fantasies about the market. So a couple things would be, we do have the US election, so that's something that doesn't happen all the time, and I don't want to get hit by a car here, right? Or me getting hit by a car. It's never happened, so let's not start today. But another one would be, you know, would there be some crazy event with China invading Taiwan, or China starting a war with the Philippines, like something like that? Let's hope not, but I'm just saying, you know, these are the kind of things that would be the crazy black swan events that would just freak out everybody. Would Bitcoin go to zero? Is that something that could happen? So Bitcoin's, I'm just saying, like, you know, black swan event kind of events. So Bitcoin's an interesting one to me. I'm not into that stuff at all. And I understand if you watch YouTube space, like crypto is like really, really hot. Like the kids love crypto. They want to know about their dog coins, their kitty coins, their bunny coins, you know. There's even a coin, true story, that's called optimism. We talk about it in the channel, it's a funny one. But the thing about the Bitcoin stuff, it's being co-opted by the big players. So like when you can now buy Bitcoin in ETFs, and you have, you know, Wall Street people promoting it, like for example, it's this weekend, I believe, it's in Nashville. The guy running for president, President Trump, right? He's going to be at the Bitcoin conference. True story. And Kathy Wood's going to be there, and Michael Saylor, and I think Snowden's going to be there. The Rumble CEO is going to be there. It's like, okay, so this sort of movement that, you know, used to be, we're going to be alternative money, we're going to be awesome, we're going to be free of fiats and governments. Like now you may have the future president of the United States like endorsing Bitcoin. Like just think about how crazy it is. So, you know, the thing, and I don't know, we got stuck on the Bitcoin topic, but the thing with the Bitcoin stuff though is like, it's kind of still at the peak that it was, what, a couple years ago. And, you know, when you just look at and compare it to other assets, it hasn't been doing that spectacular, right? Mm-hmm. Now, yes, it did great. If you got in like 10 years ago, yes, absolutely. But the last couple of years, it's just basically flat. Hasn't even really outperformed inflation. And again, I'm not into that stuff, but I'll let you do you. Also, too, when you're looking at, you know, earnings reports and you're looking at what's going on in the economy, my advice to this kind of stuff is like, take the sure things, okay? So what are sure things? So if you pay off debt, especially high interest debt, I know a lot of channels don't talk about that. They just talk about, you know, going to the moon and getting rich, that kind of stuff. But I'm telling you guys, pay off debt. It's a sure thing. Yes, it may not seem as exciting as getting 1,000% returns in a day, but hey, you're you know, lessening the burden from you and lessening the stress from you, right? That matters. And it's funny if you just saw there's like a scooter that just went by playing pop music, but you guys probably heard that. The other thing too, what you want to be thinking as well with this kind of stuff is if you're, you know, don't want to try to time the market, etc. you go with index funds. Why? Because you're buying the whole market. So has stuff been going up? Yes. Nvidia's been going up, etc. And if you had index funds, you'll see your stuff going up. The thing is, though, which is sort of unhealthy about the market, which I've been telling you guys for a while, is, and I'm just using the Nvidia example here. I think Nvidia, like in terms of the S&P 500 gains, it was some crazy number where like Nvidia made up, I think like, we'll just say half, I don't know the exact number, we'll just say like half the gains of the S&P was due to Nvidia, right? So if you remove Nvidia, or in fact, if you remove they were calling it the Magnificent Seven stocks from the S&P 500, like the other stocks haven't been doing that great. So you've been doing, and people have been seeing a rotation to other things. And this also relates to like, okay, so what are the other things? And this is what I want to bring back into the larger picture. It does relate to election. You have to be honest about this stuff. I don't want to talk about politics all day, every day, but are we going to go into an era where we're going to see more deregulation, be it with banks, be it utilities, etc.? I think defense spending is going to be the same regardless Democrat or Republican. The joke is, Republicans say, I'm going to spend on the military to be strong, and the Democrats, I'm going to spend on military so you don't think I'm weak. But it all ends up being the same regardless of, because much of the military budget actually is personnel, and they're not just going to fire everyone in the military. And in fact, there's a shortage of people. They've been having a hard time with recruiting numbers, like actually meeting their goals. That's been, I don't know, the last 2 or 3 years, the younger generations just don't want to join. So, for those of you who are young kids, I'd like to hear some of the reasons. It's actually a true story too. I have a friend from the Navy, and it's interesting. He has a son that joined the Marine Corps, and then he just posted my friend just posted a picture on Facebook that the son is getting out. He's like, hey, my son got his DD-214. It's like, what? He just got in. Like the way that they were portraying it is, I thought his son was going to be career. I thought so. So I'll be curious, and why he's getting out. I'll ask him when I get a chance. But I was just mentioning that. The thing is with like these kind of things, sort of the state of the world right now. My personal opinion, and this is sort of like consumer confidence, because you'll see these sort of data on that stuff. I keep referring back to the housing situation. I just think a lot of people are struggling with, quote, the American dream, right? Whatever you perceive that to be, meaning though, can you get that that life on TV or life on Instagram? I think that's a good way to say. And I think for a lot of people, they feel a lot of stress over said things. And the way for me, because I lived through this stuff, and the prime example was when I moved to LA/Hollywood, and it was a lot of stress because I always thought I was doing fine, like no problem. But then you see your friend goes out and buy a new Lambo or whatever, and you're like, oh my God, why don't I have a Lambo? And then you kind of feel that pressure. I'm just using the Lambo as the example. But ultimately, you got to take care of you, because in sort of the modern world that we live in, you don't know, how your friend is paying for said thing. You don't know what your friend has to do to get said thing or whatever. And it's just, that may be fine for your friend, but you got to do what's best for you. My personal opinion on this stuff is like, I think the most important things are like being able to sleep well at night, being able to spend time with your family and friends, etc. So, in that regard, again, go back to taking the sure thing. If you want to, put money on individual stocks, whatever, be my guest, but I would just limit the amounts, because especially in this day and age, or when you look for the quote hottest picks from whatever YouTube channel, unfortunately people tell you a lot of like stuff that's just untrue, misinformation, or feeds you a lot of hopium. That's sort of the advantage of, say, why would you do an index investing kind of thing, or why would you put money in CDs, or why would you put money in a high yield savings account? I mentioned this stuff. Very few channels talk about all of it. They just talk about whatever hottest coin or whatever. I give you honest advice, right? Get a good job. For example, if you want to guarantee that you're going to make and do well this year, get a 30-40% raise, or change jobs to where they double your salary. I had that happen early in my life, where like I was at one place doing the same thing, and then I went to another place and they like doubled my salary, and I'm like, wow, why did I stay at the old place, right? And that's that kind of stuff. And then you had money, or I had money left over, and I threw in the market and grew, and that's how it went. Like you how can I say it? You have yourself a base foundation of you know, sort of where the money's coming from, and then you take that excess money because you have a lifestyle to save, and you throw that in, and it grows even more, and then suddenly it feels like, this is magic, what's going on? Now, I think what happens to a lot of people, though, is they think the magic's gonna last forever, and they get a bit too, that's what I would say, overconfident, greedy, whatever. And this is sort of like, I know it's not fun to talk about reality, but that's what I do on this channel. I try to show you guys the news every single day, and it feels like if the bubble were to pop, at least this is going back to reality. Is it gonna pop all the way? That's hard to say. Honestly, that's hard to say. I would think it's if I had to bet, I would say I lead more towards the poppy side, but again, going back to there, if you stay diversified, you're gonna be fine, right? It's for the people who are freaking out all the time, who have, like, you know, not only 100% of their money in the market, they may have 100% with, you know, margin, so that'd be like, you know, 300% of their money, and then they're like really sweating it out, and they're, you know, checking their comments and videos every day if their Tesla stocks are gonna go back, you know, because they're on margin, et cetera, and they're worried. But I'm very worried about that stuff. I have exposure, we have exposure, but not to the extent to where, like, I'm freaking out every day, and that's sort of the life that you want. So anyway, I hope you guys enjoy this kind of stuff. I hope you're safe out there. We'll keep tracking the stuff in the market together, and I'll catch you all in the next video.